Well, the world of finance is often a confusing and fast-paced environment where big money is traded quickly and losses and gains are to be expected. But there is a new asset class, cryptocurrency, that is making traditional finance look like basket weaving. After a peak in November last year, the cryptocurrency market has seen a dramatic drop of 40%, exacerbated on Friday, as it reached a 6-month low. Joining me now to discuss this and more is the Australian's contributing economics editor and Weekly Spectator Australia columnist, Judith Sloan. Judith, how are you? Great to see you.
I'm very well, Rowan. How are you?
Well, I'm good. You know, I love that old story about the shoeshine boy. Joe Kennedy tells you when the shoeshine boy tells you what shares to go and buy, it's time to sell them. A good friend of mine and a good friend of the Spectators has been telling me for a while now, you've got to get into cryptocurrency, Rowan. This is the thing to go for. Well, it's lost, Judith, it's lost over $1 trillion in 3 months. Is the shoeshine boy correct? How safe is crypto?
Well, I tend to be the Warren Buffett type of investor, and he's got a really good saying, is that if you don't understand it, don't invest in it. And I think that is a very good piece of advice. Yes, so what's happened recently is that it would be fair to say that the market for cryptocurrencies, the most well-known being Bitcoin, has crashed. It did actually crash, I think it was about May last year, but I think the investment houses were sort of in for a little while anyhow, and they sort of rescued it. But at the moment, it's the young day traders that are really feeling the heat.
So, Judith, you know, how much of this is just uncertainty? Is it another share bubble type thing? Just explain cryptocurrency and also the difference between cryptocurrency of the sort that the government would like to introduce, the so-called digital currency that governments around the world, particularly in Britain, but others are talking about, and the kind of Wild West free market of Bitcoin and others. What's the difference and what are the dangers?
Well, what we think of currency normally is what we call a fiat currency. And so this is issued by the Reserve Bank. They give you a $10 bill and you could go and take it back and they'll still give you a $10 bill. In other words, it is they're issuing an asset. In the case of cryptocurrency, which is kind of a weird world, the original issuers, they put it out there and then they're out of it. And then there's a secondary market. And bear in mind, I'm basically making this up, Ron, where there is this mining which involves basically reconciling the transactions involved in the cryptocurrency. So, you know, one of the things that's often said that the energy used by these miners, okay, they're not miners who dig up iron ore, they're miners who are dealing with the cryptocurrencies, is about the equivalent of the Delhi, Denmark energy grid. So right. That's one of the issues involved in this. But look, I think there's clearly an element of gambling involved with cryptocurrencies. It's sort of an attempt to move away from, you know, official government sanctioned fiat currency, but we're not quite sure. And so China and Russia, for example, have basically put the kibosh on their citizens being involved much, probably to their advantage at this point in time. But then along came Elon Musk, for example, who's been very heavily invested in cryptocurrencies and is taking a bath. So I think it remains to be seen, but at the moment it's looking a bit dodgy.
Okay, Judith, so let's talk about the pandemic, COVID and so on, and the economy. You know, obviously one impacts the other. We've got more jobs, surging house prices, record stock values, rising inflation, and $1 trillion debt. We're hearing that, you know, Omicron might be have peaked, and this might now be leading to good times ahead. I certainly hope so. What's your thoughts?
Well, I'm sure. I mean, what really has been the experience, I think, of the last 2 years at 2 points is that, you know, lockdowns and restrictions clearly slow the pace of the economy. But, the government and the Reserve Bank have been prepared to intervene to tell us that, sugar hits work. And I mean, they clearly have. So, I read that piece in the Fin and I thought, really? I mean, yes, of course, if you're prepared to go into so much debt, the federal debt will hit $1 trillion quite soon. It does do things for the economy. I think the really more interesting question is, I think we'll get a pickup after Omicron, and I guess that's a good thing for Morrison because the economy should be going along quite nicely at the time of the election. But the really more interesting point is what happens in 23, 24, 25, when we have to start to pay this stuff down and the sugar hit, after the toddlers have gone home after their lemonade at the party, dealing with that then.
Well, Judith, you've written extensively in the Spectator Australia about your warnings, misgivings, if you like, about that $1 trillion debt that Australia has racked up. Earlier on the show, Chris Kenny was chatting to Josh Frydenberg. Josh had an interesting line in that interview, I thought, where he was quoting John Howard. Now, always happy to hear John Howard quoted, but Josh Frydenberg, the Treasurer's line was that there are certain times things are so extreme that ideology goes out the window and you just kind of have to spend. And he was claiming that, prior to COVID, the coalition was set to get us back into the black, but COVID's put, ideology as such went out the window. But I'm kind of puzzled by that because isn't ideology really just the best way to run an economy? And if you turf it out the window, how are you going to get back to the good times?
Well, as you say, I probably, go on about this a lot, but, the idea that you can run a government without a framework, without a set of principles, without not knowing where you're heading, I think that's really very dangerous stuff. I mean, I think what it's the last couple of years has demonstrated is that politicians are really keen to spend other people's money.
Yes.
It's really the easiest thing in the world to do. It's just that there happens to be a day of reckoning, and we are beginning to see a few signs of it, actually. So the inflation rate definitely overseas, in America and the UK, New Zealand, is really picking up a lot. It's less so in Australia, but, instead of us being absolutely assured by the Reserve Bank that interest rates and therefore mortgage rates weren't going to increase before 2023, it now seems to be a central prediction that interest rates will move probably by August, and people will have to start paying higher mortgage payments, and that's never a good thing for the economy.